Happy New Year, everybody. Welcome to the Middle Class Investor. Today is January 2nd, 2015. And, we had a down week in the market. What I've got up here currently is the Euro US dollar. And so the Euro, continues to sell off. And let me back up here and go to a 5-year pattern, and that way we can see better here what we've been talking about. So, the euro started to go down back here in May, and has been pretty much straight down over that time. And we've put in these support levels, and it took out this one. It looked like this one was going to hold, but then it took it out. Now it's looking like this one's likely to hold. So. I don't know if you're into trading the euro, if you want to go long the euro or I guess short the dollar, or I don't know if I'd short the dollar. It's pretty strong, and really going long the euro, it's pretty weak. So these are pretty risky. These would be risky type trades, but they appear to be at support, both the dollar and the euro. So. Nothing goes straight down in the market. So, if something's been going down for a while and it's pretty stretched, and this is a weekly chart, and these lines here, this little envelope that's here, it's called a Bollinger Band, and this is the 2 standard deviation, which I don't know how much of you know about standard deviation, but basically 2 standard deviations contains about 98% of all the potential prices, which means for example, if you sold a put underneath here, or let's say you went long and put a stop just below here, you got a fairly low risk trade, because if you go back and look at Bollinger Bands, typically what happens, you get up to the one side of the Bollinger Band, and then it comes back to the other. The markets, the reason they call them bands is it's a band around price action, but I always kind of think of it as a rubber band. Prices can only stretch so far, and then they start to snap back the other direction. But anyway, that's the Euro US dollar. Looks like, to me, it's at support, although it could chop around here a little bit before it starts going back up. Let's look at the 10-year interest rate. This is that low we've marked. Continue to keep an eye on that. Interest rates were down this week, and what we're looking for is for interest rates to tick up over this line and then over this line, and then we'll be pretty, I think we could say with some confidence that this low back here then would be the low, and we would look for interest rates to go much, much higher at this point. The Dow and the S&P look pretty much the same, so I'll just look at the S&P. Here's that rising wedge we had. It's kind of not playing out. I'm not sure about it, but we have here another one. So let me put this on a daily. Look at the last 6 months, and let's look at this rising wedge. You can see it's just a smaller version of what we've been looking at. And if you go back and look at the bigger one, we did note that prices tend to pull back to these lines, these trend lines, and then reverse. So right now we're about midway between this line and this line. Let me zoom in on that so you can see that a little bit better. You can see here we're about midway between here, between here and between here. So we would expect prices to continue to pull back into this area, and then what we would expect is a bounce. Now, when there's actually another name for this pattern, and it only happens at the end of trends, but I don't want to get into the naming of that because it's a whole nother science around the market. It's not just technical analysis. But I need to tell you that if it does, let's say it comes down here, comes back up and breaks out of this, it typically will trade back to the low of where it started. So that's around 1850. So just to be aware of that, if we come down, I think we're going to come down here and bounce first. But if we come down here, bounce, and then come up, make a high, so a lot of times it'll come out above it and then roll over. And if it rolls over to the downside, look for the market to go to this 1825, 1850 area at least. So these patterns, this ending diagonal or rising wedge, a lot of times they tend to happen at the end of trends, and they tend to be terminal. They tend to mark the end of the trend. So just be aware of that. It's nothing's for sure, but just be aware that that's a possibility. One of the things I want to look at is the global Dow. This is like, I don't even know how they figure the global Dow, but it's like the industrials of the entire world. And I guess the numbers aren't so important because nobody in this group, I wouldn't think, follows the global Dow. But notice that the global Dow is making, it made a high, came back, made a low, made a slightly lower high, and then sold off. And now it's kind of chopping back up. And it could chop back up into this area right in here. But if it takes out this low, in other words, let's say it comes up here and then starts to chop down this way and takes out that low, that's probably a trend change. So just be aware of that. It's something that I've been watching. I haven't been talking much about it, but I have been watching it. So I've got a support area, but if it breaks that support area, this is likely going lower in a trend change. Okay. Volatility. We talked a few weeks ago. We were talking about how this line didn't hold and it broke down, and then boom, it popped right back up. And the line tends to, if you zoom in here, yeah, it broke down through here, but look, when it pulled back these 2 weeks, this week and then this week here, pulled right back to the line. I haven't adjusted these lines or anything. And then last week you can see we had an uptick in volatility to correspond with the down week in the market. Let's just go back to that and make sure everybody caught that. The market was down this week. And these last 2 weeks have been kind of weird, right? Because you had Christmas this week, which was an up week. So we had the Santa rally, as I noted in the video. And then this week, is the New Year week, and both were diminished volume weeks. So the trading volume was very low and the activity was very light in the market. But notice how I think it's interesting that the Santa rally went up and then immediately they sold it off. So that's fairly telling. And like I said, likely what we're going to see is we're going to come down to this line sometime next week probably, and then bounce. And I wouldn't be surprised if we actually go above this line slightly before we roll over, and at least take out. If it rolls over and breaks out of this lower wedge line, it's going to at least take out this low. So we're looking to go back to 1825, 1800 area on the S&P 500. Let's take a quick look at Japan. Japan's in a sideways pattern. We've been talking about that for a while now. Although Japan could break out to the upside, and I don't have the yen up here, but I was looking at the yen. Well, let's see if the FXY. Yeah, this isn't a great picture, but I was looking at the yen, and it looks like to me the yen is about to bounce pretty substantially and could get, it could retrace this whole move, or it could stop around here into the 115, 120 area. So on the FXY, I don't know what that is on the yen, I apologize. But I guess what I'm expecting to see here is I'm expecting Japan to chop in here a little bit more and then break out to the upside. The United Kingdom, to me, this looks like a potential trend change. And let me just again, I'll leave the numbers off, but let's say this is the low from this swing down. A lot of times the market will move back to an area just right here. So look for this to get up to here, maybe come back down a little bit, and then maybe come up, to maybe the trend line or somewhere in this area. And if it's a trend change, then we're going to look for this to happen and take out those lows and go lower. And we don't know, right? We don't know if this will be the trend change. But to me, this looks like a pretty solid move down. Sometimes when you see like a 1, 2, 3, and then it goes back up, that's just corrective. But when you see 1, 2, 3, it goes back up a little bit and then takes out that low, that usually is a sign that this is only going to bounce a little bit. It might bounce to here, pull back, bounce to there, and then pull back harder. So I know we have one of our viewers is in the UK, so that's kind of my analysis on that. I think you'll see it bounce into this area right here, probably chop, bounce to here, chop down, and then chop its way back up here, and then sell off harder lower. That's what I see happening on the UK EWU, which is the ETF for the UK. Now these numbers over here won't match up. Like if you're trading the FTSE, they won't match up, but this pattern should look very similar to the FTSE. I've got the DAX on this other chart. We can look at that. If I can find it, here's the DAX. There's two DPs I have in here. I don't, now these are actual numbers for the DAX. So you can see here, we finished the week at 97.75. That's this area right there. And, the DAX is right in the middle of an area that it could literally either, and I know this sounds kind of cliche because this is the way the market is, it could go back up here and test this DP and then come back, or it could be that this DP is it, and this is the move down, because this was slightly higher than this one here, and so this could be the move down, this could be the retest, and then down to take out this low down here at around 8,400, 8,350. So the DAX is really kind of in a no man's land. I don't see anything in the DAX that gives me direction one way or the other. Obviously, trading somewhere in here to the upside would have been a pretty decent trade. Now that we've already made all this move, I don't know that there's that much reward in going, to the long side too much here. So I would just, if you're not in the DAX, I would be careful and not maybe get into the DAX at this point. The other, whoops, that's not what I wanted to see. The other thing is oil. There's been a lot of talk about oil, so I thought I would look at it. I think we're really close to a big bounce in oil. You can see here the move down that the software has caught. I think we're probably looking at, let me see if I can get some of this in the screen. I think you're probably looking at, right in here, this 75 area. A lot of times the midpoint of a big candle like this ends up being, your line of support. So, you might see oil bounce all the way into the 75 area from down here at 52. But then again, this move, this particular run downward right here is fairly long. The software is calling it a wave 3, and if in fact it's a wave 3 and you get a bounce into this area right here on the wave 4, then the next move should make a lower low below 3 here. So we should take out this 52 and maybe even get down into the 45 area, and then you're going to see a pretty good bounce, like a big bounce. But this will take a while, right? This is a monthly chart, so these are monthly bars. So this is 1, 2, 3, 4, 5, 6. 7 months ago, it was up here at $103, and now we're at $52. So it's been cut in half. That's pretty significant, and there are ramifications for that in the global market. It's not that it's just good for consumers, which it is, but there are major investment decisions made based on what the price of oil is, and also a lot of your smaller drilling companies here in the U.S. borrow their money for their capital, and those loans are based on oil being at a certain price, and if oil gets below a certain price, the companies that loan that money could call those loans in. A lot of times they're structured that way, so that the borrower just doesn't file bankruptcy and leave the bank holding the bag. So anyway, I would look for oil to make. I think we're up for a pretty strong bounce, a $25 bounce or so, and then I'd look for oil to come down here and actually break this 52 area to come into maybe the mid 45 to 48 area, something like that. So that's oil. Oops, I didn't want to get into that. Let's now the one I don't think we looked at gold, so we'll look at gold real quick. This right here was the high back in 2012 on gold. This purple line that I have here is just the last run up into the high. That's all that is. And so a lot of times that you can put a Fibonacci on that, and you can see, okay, what's the retrace going to be? And you could retrace 100% of this, which is actually what I'm expecting to happen. But it could take a while. I mean, this low goes back to when was this? This was 2008. So we've already got 2 years into this corrective move to here. So I think I think there's a pretty good risk to reward right here with oil. With gold, mainly because oil's already kind of showing that, and the dollar is run pretty far and is probably due for a pullback. So I'm kind of thinking maybe gold could pull all the way potentially up into this 1550 area, maybe 1650 area before it goes lower, and then you don't want to get too greedy. I mean, if you went long gold here, or if you bought some physical gold, I think this is a good place to buy some physical gold if that's what you want to do. If you're just going to buy futures, or you're going to buy the GLD, or you're going to buy some other gold instrument, or gold miners, the GDX, the miners like Newmont Mining or Randgold or Barrick Gold, companies like that, I think this is a really good place to probably enter some of those positions. I think the risk reward is really good. So, but like I said, don't get greedy. If you get up into this area where there's just a lot of overhead supply right here, a lot of chop, and it's probably going to keep gold from going much above that 1650, 1700 area. Since I mentioned the dollar, we'll just take a quick look at the U.S. dollar. The U.S. dollar has been pretty hot here lately. I've got it going into this support area, and we might make it. I don't know. It's hard to say. It's pretty strong this week, and it might follow through again next week. But it really doesn't have, I don't think, a lot more left in this run. And that's why I think gold and oil and silver, if you're looking at silver, those are all pretty good bullish plays, because I think we're pretty close to the dollar stopping, and it's going to reverse a pretty good portion of this, probably even come down into this mid 70s to 78 area before it makes another run up. So I think that speaks bullish for precious metals and items like that, and probably the stock market too. I don't in the last several years, the stock market's gone up when the dollar's gone down. And when I speak about the stock market, I'm talking about the U.S. stock market, the S&P, the Dow, the NASDAQ. So that's really all I have for this week. Continue to pay attention to the markets. If again, I've said this before, but if you think this program is useful to your friends or family members, certainly send it to them. Send them a link. To send them a link, all you would do is you would just click on one of the videos, and then come up here, to where the URL is, and copy and paste it into an email. And then what they can do is they could come over and subscribe if they want. They can subscribe to the videos, and what will happen is over here on the left-hand side in your YouTube, when you're on YouTube, it'll tell you that you have a new video from Middle Class Investor. But as most of you know, I go ahead and post these either on Friday or Sunday, sometime over the weekend, and I just, I had today off and I had yesterday off, and so I went ahead and just posted it today. So again, Happy New Year to everybody. Thank you for coming in and listening to the Middle Class Investor. You can follow me on Twitter at InvestorClass, and again, share it with your friends and family, especially if you think there's some value in it. All right, everybody, thanks. See you next week. Bye-bye.